Hi, John Ross, Banyan Hill Publishing. I found something in the crude oil markets that I really want to bring to your attention because it's something we rarely see. Now, I had to go back to 2002 just to find a similar price pattern and similar sentiment to compare to what we're seeing today. Now, the reason I think we should be monitoring this is because I think it indicates the next move crude oil is going to make. And we as investors and traders can position ahead of that to make some good money. Here, check it out. This is a weekly chart of crude oil futures. So these are weekly bars, and it goes back about 3 years. The blue line across the bottom represents the large speculators' net position in crude oil futures. That is to say, this is the way this group as a collective is betting on crude oil. Now, because that number is above zero, it means they're bullish, or net long, so that means they're bullish. And what is important to note is that divergence between that blue line and the black price bars above. Typically, we see these two move together. This year, we have not. Going back to almost the beginning of this year, the large speculators' net long position, so their bullishness, peaked, and it's been trending lower all year. However, the price of crude oil did not peak. It's been trending higher most of the year. Again, this is a big divergence, one we rarely ever see, and one that I think brings us an opportunity. Now, when we think about this divergence and why it matters, let's think a minute about the large speculators and their thoughts about crude oil. So they got to a point at the beginning of this year when they thought it made sense to start unwinding their long positions, to start becoming less bullish. And that's basically the way that their thoughts have been trending all year. However, the price of oil has been resilient. It's been slowly, stably moving higher. Now, when these traders, these speculators, decide they need to put money back to work or are seeking places to move money, they'll look back at crude oil now and they can say, well, listen, here's been a very resilient trend, very strong price action, and we may get a piece of news or a piece of data that really sparks the interest of oil traders, and all of a sudden now that we've seen the position trending lower, the position coming down, all of a sudden there's a lot of new potential buying interest that can come into play and start driving the price of oil much, much higher. I think this is what we got to be monitoring. This is what we got to be ready for as traders, as investors. So if you're considering getting into crude oil or getting into some energy or oil producer shares, then this is something we want to watch. Because I like digging into things like price action and things like sentiment, because I think it helps give us a clearer picture of the market when a lot of the fundamental data can be very, very murky. Now, I talked about some of the fundamental narrative in my article today in Winning Investor Daily, just to kind of give you a sense of the sort of teeter-totter back and forth between the bulls and the bears that's happening now in the crude oil market. I think, even though maybe today isn't the day we jump in, I think we're getting very close to a point where we can see crude oil break out of its range between $65 and $70 per barrel on the WTI futures contract and really blow off here and give us an opportunity to make some very good money trading, whether it's in the crude oil futures market, or whether it's in the shares of companies, or whether it's in options on those shares, or even in ETFs. Really looking at a potential here for a big move, for a good move, as some of the shorter term ideas kind of work themselves off and we get back to the bigger picture for crude oil, and that is bullish right now. So I hope this made some sense. I hope you like it. I hope you can use it. As always, we thank you for listening, and we'll talk soon.